Welcome back. You're tuned into Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, as we speak, that recovery that we're talking about, that's well and truly on. So now we're only down 30 points odd. You like it to sustain at these levels. You know, you could have a quick fire 20, 30 points in the last few minutes or so. So let's see whether or not that does take place. But for the time being, Nimesh is with us. Nimesh, what are you picking up in terms of flows? Are they improving a little bit? The FI flows continue to remain on the sell side.
So again, today it looks like the flows are negative, but unlike yesterday when there was a large sell-off, today is not. That's not the case, is what I understand. The big chatter in the dealing room with regards to flows is that one of the leading hedge fund is a big seller in India, and that's the reason why I'm seeing such large numbers for the last few days. I guess maybe in the next few days that supply can come to an end. So a lot of people are talking about whether that fund is likely to finish the selling in the next few days. So that is a big chatter point as far as flows are concerned. But if you look at today's trade, while we saw a big sharp fall in the middle hours, it was on low volume. So it looked like it was a shallow fall, and hence you're seeing a bit of recovery as well. I guess the weekly expiry is also playing out. But technically, the good part is that we are holding on to that 17,800. That's a very crucial level from a technical point of view. I guess if that holds on, maybe you'll see a bit of covering as well, because looks like some of the large cap names are a little oversold. So that's the other feedback. The other interesting feedback that I got today as far as flows are concerned is within financials, there is a bit of a pair trade happening now. So a lot of funds are now buying into HDFC Bank and selling ICICI Bank. So ICICI Bank was a big outperformer last year, and HDFC underperformed, right? And now with the trigger of a merger going through, there is a bit of shift happening within financials from ICICI Bank to HDFC Bank. So that's another important feedback. We keep hearing about sector churn, so that continues today for a change. There is a bit of limelight in the cement stocks. All the stocks are buzzing in trade. But as I said, today doesn't look like a large sell-off from the FIs. But of course, the weekly expiry is playing out. Technically, 1700 is a very important level to watch. But I guess, looks like market is slightly oversold. So some of the large caps may see a bit of a bounce back if there is a relief rally both globally and in India.
Nimesh, I think even last weekly expiry, the Nifty saw a bit of a bounce back. So on Thursdays, it's coming to the savior actually of the bulls. Let's see whether or not we can hold on to that. But individual stocks, what are you tracking?
So in terms of individual names, the first stock today on my list is Chola Investment. That stock is buzzing in trade and on good volumes. I believe the reason for today's uptake is largely the selling pressure from a leading FI is largely over, and hence a bit of a bounce back in that stock. So that's the first one. The second stock is Divi's Labs. That stock is sharply under pressure today, down 3%. Ekta spoke about the export data and concerns regarding to that. But I believe there is a small selling flow as well from a leading FI. But for Divi's Lab, the other important trigger to watch, and that's been a big chatter as well, about a large capex getting approved very soon. So that could be a next big trigger to watch as far as Divi's is concerned. And the last stock is L&T, a bit of a defensive buying going on. Remember, before the budget, this is a best proxy play as far as capex is concerned. So there is a bit of buying back from the large institutions. And also, there was a JP Morgan note today, and they've raised the target price to 2,300. So a bit of buying is back in L&T, and hence that stock is buzzing in trade.
Okay, all right.